Aloha everyone. It was another weak overall day for the market with the Dow Jones Industrial Average closing near the lows, the Russell 2000 leading the way down. The good news is that the weakest index, the Nasdaq, showed some relative strength and outperformance today. And for the second session in a row, volume was lower, so at least we're not seeing distribution days as we move down. And another possible positive is that I do have two new higher quality long signals along with 6 add signals. Are any of them perfect? Absolutely not, but I want to go over something really quick before we get into these. An example of what I'm talking about, like if a stock doesn't work right immediately, I start raising stops. DZSI was a new long yesterday due to the green bop catalyst and the very close first sell stop. So this was my first sell stop. This was my second sell stop right here. If everything acted normally, ZCSI basically had a very normal day on Wednesday, but you'll notice that it lost green bop. That means all of my stop gets raised to this low right here. If it would have started to move higher on the day and had a huge intraday reversal with on heavier volume, even if it would have kept the green bop, I would have moved all of my stop up to this level. Abnormal price action immediately means I start raising stops. So with that being said, I have a lot of two new long positions, a lot of add signals. I want to make notice that all these long signals are based on the potential 4-to-1 reward risk ratios. You look at those ultimate lows in the previous recent uptrend, like GLMD to the November lows, YY to the 2017 lows, STRL to the November lows, HLG to those July-August lows, KIII to the November lows or even 2017 lows, MODN November, TBBK February to April, MGRC October, November, or April through July, whatever you want to use. But basically, they're all offering the same greater than 4-to-1 potential reward to inherent risk ratios using either the very first stop level or both of them combined. So keep that in mind when we go through all these. All of these long positions are very small, with the largest add signal being KIII at 2%. And the one and only large long signal, which will start it off there, YY. YY is an extremely high quality can slim and an extremely high quality perfect speculator stock. Candle reversal bar right near the 50-day moving average. I want to get long 4% of my account capital, 2% for can slim, 2% for perfect speculator, not extended, at 101.97. My first cut loss level is right there, 98.49. Final cut loss level right there, 91.67. YY fails the first stop before hitting the final one. Remember, half or all of the stops get raised immediately. I'm not really sticking around. And if you're looking for a perfect signal this evening, all of those stocks I just went through, YY extended from its 200-day moving average, quote, not perfect. GLMD, perfect speculator low price stock scan. Pocket pivot point signal on very strong volume. It's slightly extended from its 20-day moving average, so I'm actually wrong. I've listed this as a 1% long signal. It's a 0.5% long signal, and I am changing that on the piece of paper that I have this written down on. 814, the limit order. 774, your first stop. 760 right here, your final stop. 0.5% of the account capital because it's extended from the 20-day moving average, and it's also extended from the 200-day moving average, so once again, not a perfect stock. Now with the add signals, the best one, KIII. KIII, high quality can slim stock, high quality perfect speculator stock. Very bullish candle move off the 50-day moving average, pocket pivot point signal. 2% for can slim, 2% for perfect speculator. It's halved because it's an add signal, so 2% of my account capital into KIII, limit order 102.80, the high of the day. Your first stop can be this low right here, 100.95, a move below 101. And the final stop in this position, 98.80, since it's an add signal, because after these lows, I don't really see anything to work with besides if you want to use this one until you get back to here. So you could also use this as your first stop and this as your second stop. You know, it's kind of splitting hairs on this one. Me personally, I might give it a little bit more room to work. What's this level right here? 96.05. So I may give it down to 96 on my final half. It depends on how it moves immediately, but KIII is the higher quality add signal. STRL, pretty good add signal, but there's a problem at 2. like I forgot to say, KIII is extended from the 200-day moving average, so once again, not perfect. STRL 2 is extended from the 200-day moving average, and even though it's touching all of its short-term moving average, it's slightly extended from the 50-day moving average, and it was up quite a bit. I don't like chasing stocks up more than 5% on the day, but it's just clearing these pivot point levels with everything confirming. I got shaken out of the position here, so while this is an add signal, for me it's a buyback signal. So 1% of my account capital, STRL, limit order 1786, not the high of the day due to that big move up. First cut loss 1675, final cut loss 1602. STRL, 1% of my account capital. Then HLG, here it is again. It's back as another add signal. Come on, price pattern, open up. Why has it got to be so damn stubborn? Trying to get, there it is. There's the open price bar, so I can show you that it closed higher than where it opened, closing at the high of the day, opening at the low of the day. As you can see, that's a full open body, real body bar. Volume's not heavier, but it still has that max green bop for the past 5 days, green bop for the past 20, canceling quality, perfect speculator quality. So it's definitely an add signal. But the first long signal, because it's so extended from its 50 and 200-day moving average, was 1%. The second add signal was 0.5%. This one is 0.25% for the add signal. So just $1,000 I'm placing into HLG. MODN, TBBK, and MGRC are all getting 0.5% of my account capital. MODN is a low price perfect speculator scan. MGRC is cancelum quality. TBBK is cancelum and perfect speculator quality. TBBK want to get long. Limit order 969. First cut loss level 924. Final cut loss level for now 888. But if it takes out 924, I'll be moving my stops up before this add signals stops comes into play. MGRC, I got shaken out of half of it here when it went below this low here, so this is a buyback add signal combination. Want to get long 47.19, first cut loss 45.86, final cut loss 45.43. MOD in another add signal, still using that 1565 as my first cut loss level with this add signal, just like with this one. Final cut loss signal 1480, so it moves below 1485. I will be out of all of the add signal using this low, but I really like this technical pattern. I like all of them, but once again, let's review. None of them are perfect. MODN is extended from its 20, 50, and 200-day moving average. TBBK is extended from its 50 and 200-day moving average. MGRC is extremely extended from its 200-day moving average. KIII is extended from its 200-day moving average. HLG is extended from its 50 and 200-day moving average. STRL is not only up a lot on the day, but is very extended from its 200-day moving average and extended from its 50-day moving average. GLMD is extended from its 20 and 200-day moving average. YY is extended from its 200-day moving average. So if you go long these stocks, I recommend, if you're a new trader, to keep that reward risk in line, to use only the very first cut loss level I have here. If you're experienced, obviously, you can move it around and let it work, let the stock work if you want to let it work, let the price action weaken before you start cutting your losses, do whatever you want. But if you do take any of these long signals and you're a new trader, due to none of them being perfect, if you're emotional, I recommend trading none of them, because you want everything to be lined up in the market and long positions whenever you go long. If you want to really increase your win-loss percentage rate and increase the chances of making the most money while having the least cut losses possible. Me, I kind of don't care, because I can't really tell when a market will or will not bottom. And with the V-shaped rallies, I'm more than happy to piecemeal my way in and out of positions and or the market until I can get fully invested. So just tread lightly here. It's not a safe zone yet, but using the first cut loss level, all of these are pretty good. I've listed on the new positions page the quote safer ones and then the riskier ones that you should avoid. All right, everyone, I'll see you in the chat room on Thursday. Aloha.